evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Monday, the 15th of August, 2022, just after 5:40 p.m. Sorry for not doing weekend updates. Went to the hospital on Friday, had to meet with the doctors, looking at the surgery. They asked me not to do updates over the weekend. I cheated. I did the subscriber ones because people are paying me for that, but I didn't do the free ones. I'm feeling so much better. Getting there where I'll be able to just be back to normal. I'm already looking to do special reports on the markets, and I'm preparing my schedule for the beginning in September live webinars. So everything's getting healed. They said it'd be another 2 weeks. This week I'd feel a heck of a lot better. Next week they would doubt that I know how much pain I've been in from the past 2.5 weeks of the operation. But that's where I'm at. Okay. If I were to put 15 good people in a room, chartists that know the markets, and I were to tell them that China's economy is shrinking dramatically, missed all the numbers, tanking, that the New York region, if you looked at today's numbers there, in a state of collapse, there's no other word, that the housing market is sick, falling rather precipitously, would you think that you'd be able to rally stocks 4 weeks in a row? And today, given the information I just said, rally again. I would bet all 15 would say, no, that is not the scenario, but that is the scenario. You don't fight City Hall. Second thing you don't do, you understand the markets you're in. You're in a market that had a huge break, that wants to come up, and there's a huge, huge battle that affects the metal markets and the financials going on. And the battle that you're facing is, does the Fed end sooner rather than later? That's the battle. Why? Because everything's happening so fast. Now, some analysts think that inflation will get stuck, be it in the 6 to 8% range, and it'll get sticky there, and that'll force the Fed to get more aggressive and put us into the hard landing. Others, obviously with this rally, have to think that by its own natural weight, inflation will come down, as we're seeing, and be it the energy prices, the grain prices, all the raw materials just come down. They don't have an answer for me on rent and labor. I keep asking and nobody's giving me one, because those numbers are sticky and they don't go away. And when you measure inflation, they're a big part of it. I'm not willing to take sides. I'm a chartist. I play the chart. That's all that it's about. I was laughing tonight, and I've got to say this, I'm watching Kramer, and he's all enamored with this lady that's a Fibonacci specialist, and I'm not knocking it. I know Fibonacci. I'm sure she's good at it. It's not the same as Gann. Gann I can't figure out for the life of me. Fibonacci I certainly have a handle on. And she's using two moving averages that are exponential, and she's saying when one crosses the other, you're bullish, and if it crosses the other way, his words, watch out below. Is that a technique? He claims the results are good. Okay, I claim results are good on Bollinger Bands if you look at them, and moving averages if you look at them. So there's something for everybody. I want to make this clear. I am not knocking her. I'm sure her technique's reputable and good. I'll give her the benefit of that. And Kramer, if that's what he's doing. But he's devoting his show to it, and I started laughing about that. In any case, what we have to look at right now is we've lost the upside momentum in the metals almost across the board. Is there any downside to them? Probably lost because the dollar was so strong. You don't want to get this word stochasticitis, which is when you have an embedded reading, you lose it as the session closes, it stayed embedded, and at the beginning of the next session it starts losing it, or it loses it intraday. It can gain it back by the end of the day. You've got to be very, very careful. Let's go to the charts and get a feel for what we've got. In the gold, the question was, could we get up and rally to the 18-week average? And I kept saying on the daily chart, you had to get over 1825 to prove the market was really good. If you take a look at the action, we're starting a roll to the downside. First, you have an outside day down today, Monday. It's also got a lower high than the high here. So if we take to the next chart, we see that we have a pattern of lower highs, lower lows. That is called a downtrend. The definition of a downtrend by most technicians will be lower highs, lower lows. The market is over the 18-day moving average of closes. I use that to define what is the what? What is the bias of the market, up or down? If the bias is up because prices are over that and the trend is down on the swing line, you have nothing. The bias filters the swing line. So I know you'll tell me it's a downtrend. I say, nah, it could be a reaction down. I don't know what you call it. The market's been unable to make it up to the 200 and the 100-day average of closes. The Bollinger Bands were back here. It did contain the market, and then it started keeping its move to the upside. It already had past tense starting here. Higher lows, higher highs. Has there been a way to be short the market? Absolutely not. Has it run its course? That's what we don't know. If you watch this right here, this is the close of business today. You did not lose the embedded reading. The number has to be under 79 on a closing basis. Therefore, this is what I call that word. My friend Ron, one of my brokers, been with me, 40 years, called it this when I developed slow stochastics with the founder, George Linn. I saw this and I got nuts from it. And I said, he's on to something, and obviously it took me another 20 years to figure out what it was. I truly mean what I'm saying. And I liked it better than MACD. I was enamored with relative strength index, Williams, regular, and all those different momentums. But this had something different. There was a gentleman named Peter Elides. And Peter was able to take Fibonacci and other methods and give them characteristics. And I kept saying, I wonder if you can do that with any of these. And I figured that out. And with that, that's my enhanced Bollinger Band course. I'm able to figure this out, and I think I got a pretty good handle on it. So, if this market closes with the red line under 79, you can't be long anymore. It's the end of the game. If it recovers, the target becomes 1837.5 potentially. That's where you're at in this particular market. When we come to the gold-silver ratio, just going flat at this point, silver market, let's do the same thing here. If you and I take a look, you were embedded, outside day down, not the same chart pattern. You have a higher high than the previous highs. I think you'd agree with me on that one. And this is where you're at now. And here too, you're flirting, and that's the word I like to use, with losing the embedded reading. You know, you get a good report in the morning and metals take off, you'll be embedded again. I don't know what they're going to do. It's certainly not the spot to add. It's the time to be ultra defensive. If it loses the reading, the odds are very strong you're going to go back to the 18-day average of closes. My gosh, copper's in the same predicament. Embedded on the close. If you're going to lose the reading, you lose it tonight. That means the 18-day average of closes should be the support, 354.07. And obviously, momentum goes from, it can be overbought to neutral. It can be embedded to overbought, then down to neutral. There's a stage it has to go through, because when you get these numbers, and that's part of me defining where is it in the stage, that's what occurs, and you don't immediately get another buy signal. It's got to rescue itself, and it's got to rescue itself if it's going to be good, literally right now. Oh my gosh, look at this. Here's another series, all right? Now this one lost the embedded reading today. Do you see the reading at 76? That's lost. The only time you can get it back is the day after it's lost, under all circumstances, by the markets, both the red and the blue lines getting back and staying over the 80 level. Well, I'm not saying it can't happen. I'm saying that's what it would have to do. What's the downside target? Well, the first one you're fighting at, which is the 100-day average. The second would be 910.5, the 18. Unless you close under the 18-day average of closes in platinum, in the silver, in the copper, and in the gold, you're not in downtrends. You're in corrections. There's a difference. In the palladium market, you didn't have this. If you step back with me, Okay, this was today, and here we are, Friday. Oh my gosh, it was embedded, and you lose it here too. And now where are you? This is big time support. Big time support. The trend is up, higher lows, higher highs, unlike so many of the other metals, which have a mishmash of a higher high and low, whatever. This is big time support. Can it get through that is going to be the big question that the market has to ask. And part of why these markets broke is the dollar. What happened in the dollar is people took a look at the New York region. Wow, terrible, absolutely terrible in the industrial capacity, everything they're doing. It's terrible. A huge decline. China. You put the U.S. and China together, we're the biggest game in town. Why is the stock market rallying if this slowdown is going on? It's going to hit earnings probably next quarter. Certainly not the quarters that we're reporting. Forget it. That is not where it's going to show up. It's going to show up in the next one. I can't answer it beyond that's my ideas as to what the market is going to do. So for those of you new to the markets and new to me, you might want to get your hands on this. You know, one of the things that we try to offer you is a way to learn. And I put together a kit with some courses in it for you. Yes, you're going to be able to get stochastics, a little degree of understanding them more, the pivot point, the Arun indicators, the mercantile courses. CME puts together great areas for traders, tools for every form of a beginner. And there's a lot of sophisticated traders that come to us from the stock market. They want to know chart patterns, other things. I've put it all together here. So how do you get this? It's so darn simple. All you're going to do is you can either take your cursor, push it right up to the top here, an icon will appear, or you can go to our website at www.iraepstein.com and free offers. Obviously, here's all the information for you. I make it simple. I hope you take advantage of it. I'm Ira. I'll see you tomorrow.